Economic growth in China is slowing, but is that translating through into lower demand for food? I asked David MacLennan, the chief executive of Cargill, the world's largest agricultural trader, whether they were seeing signs of a slowdown in food demand.
We're involved in the chicken business in China. We recently built a chicken facility in Anhui province. Demand has slowed down. Some part of it is because of slower economic conditions. Part of it is concerned about food safety, and some of it is concerned about animal safety. But I think ultimately it's going to be fine. So I wouldn't characterize being worried about China, but certainly we take note of this recent slowdown.
But it doesn't necessarily follow that it'll sort of flow through into sort of slower food demand.
It does flow through to slower food demand. So yes, but ultimately we have a long-term commitment to the country, and so I think this is a stage like it is with many economies.
Two countries, Cuba and Iran, both look like they're going to have sanctions lifted respectively with the US and the West. What sort of opportunities do they present to Cargill, and are you interested in doing business with both of those countries potentially?
Well, I think with regards to Cuba, it's something we've worked very hard to help get to the point where we are now, and we believe in free trade. We believe in helping economies grow and bringing in countries as part of the global food and trade system. Cuba, it's a small country. It's about 11 million people. It's close to the U.S., obviously, so ultimately it's not something that's going to rise to the very top of the list, but we're going to continue to work to help them develop their economy, and particularly as it relates to agriculture and trade and agricultural products. Relative to Iran, I think it's clearly a more significant country relative to its population, relative to its potential role in world trade. So we'll wait and see how it unfolds relative to the lifting of sanctions, but something, yes, we would be interested in proceeding with.
And this year marks the 150th anniversary of Cargill, which is quite an achievement. I mean, can you just give us just very quickly your view on why the company has prospered over 150 years and where you move next with this business?
Well, the next 150 years, I mean, it's hard to imagine the next 150 years for obvious reasons, but we're very proud of the fact that we've been in business for that period of time. I think it's due to a number of different factors. One is we have a very patient owner base. They're very supportive of management. We have a great relationship with them. And being private, I think, means taking the long-term view. I have a lot of sympathy and respect for those that lead public companies and the demand for immediate profits and the demand for year-on-year growth in their quarterly earnings. And while we have that expectation from our owners, I think their long-term view and their patience gives us a little more long-term perspective as far as how we get businesses up and running and how we think about the future and our strategy. Going forward, clearly continue to grow in emerging markets. There's a lot of countries, you mentioned two, Cuba and Iran, that we think will benefit from being part of trade and being part of the world food system. A lot of countries like Indonesia, China, Brazil that are continuing to develop their agricultural infrastructure. So we think we have a role to play, and I think that's what makes being in the food business so exciting.
Do you grow organically or through acquisition, or would it be a mixture of the two? I mean, do you have the firepower to sort of to do deals?
Historically, we're about half and half. Maybe 40% acquisitions and 60% organic growth. Acquisitions are expensive these days. There's a lot of capital in the system. It's very cheap to access it. So we haven't been as active on the acquisition side as we have been historically, but ultimately it has to be both.
But you see that there's a lot of money out there. So there's a lot of private equity money you find yourself competing against and other sort of players.
Yeah, I think it's private equity, but it's other competitors in this space and also competitors that are publicly owned where they have a currency in the form of their stock, which they can use to make acquisitions, and that's something that we don't have being a private company.
Do you feel disadvantaged by that?
I don't. I think we've got our earnings, our owners leave the vast majority of our earnings inside the company for us to reinvest, and I think ultimately our patience allows us to find good acquisition targets and make good decisions.
And if we could just go to your most recent results, it was a very good performance from your sort of energy oil trading business there, and it's something that you sort of reworked last year, exiting a few areas. Can you tell us a bit more about how they achieved that good performance? I mean, was it sort of positioning correctly for the oil price drop at the end of last year?
Yeah, I think, it's not only positioning correctly for the oil price drop, but also looking for opportunities. I mean, there's been some movement in oil markets, obviously. I think they did a good job of restructuring, of lowering their cost base, of being more focused in the markets where they want to trade. We've got a new leadership team in place. So I think the combination of all of those components has led to the results that you referenced.
David MacLennan, thank you very much.
Thanks, Neil.